What are the core ethical principles in the AICPA Code of Professional Conduct, most relevant to IUD?
The AICPA Code emphasizes principles such as responsibilities, the public interest, integrity, objectivity, and independence, due care, scope, and nature of services. For CPI exam purposes, the most tested practical themes are integrity, objectivity, independence, confidentiality, and due professional care. If one of those is impaired, the whole engagement can wobble like a three-legged stool.
What is integrity in the context of the AICPA Code?
Integrity requires a CPI to be honest and candid within the constraints of client confidentiality. It means the CPI should not knowingly misrepresent facts, subordinate judgment to others, or be associated with misleading information. On the exam, integrity is often tested when a client pressures the auditor to ignore misstatements or manipulate presentation.
What is objectivity, and how is it different from independence?
Objectivity is a state of mind requiring impartiality, intellectual honesty, and freedom from conflicts of interest. Independence applies more specifically to certain attest engagements and requires both independence in fact, actual mental independence. Independence in appearance, how a reasonable third party would view the relationship. A person may try to be objective, but if a financial or close personal relationship exists, independence in appearance may still be impaired.
What are threats and safeguards under the AICPA conceptual framework for independence?
The conceptual framework identifies threats that could impair independence or objectivity, such as self-review threat, advocacy threat, familiarity threat, undue influence threat, self-interest threat, management participation threat. The CPI evaluates whether safeguards can reduce threats to an acceptable level. Safeguards may include firm-level policies, separate review, staff rotation, or declining the engagement if the threat cannot be mitigated.
What is a self-review threat, and why is it important?
A self-review threat arises when the auditor may need to evaluate evidence or work product that the auditor or auditor's firm prepared. This is dangerous because people are notoriously bad at enthusiastically criticizing their own prior work. Examples include preparing accounting records that will later be audited, designing systems or controls that become part of audit evidence, valuing amounts that the auditor will later test.
What is management participation threat?
A management participation threat exists when the CPI assumes responsibilities that belong to management, such as authorizing transactions, deciding journal entries, directing employees, or making strategic decisions. Auditors may assist management with certain administrative tasks, but they cannot function as management. If they do, independence is impaired.
How does confidentiality apply to CPIs?
CPIs generally may not disclose confidential client information without the client's specific consent, except in limited situations such as compliance with a valid subpoena or summons, peer review, ethics investigations, responding to actual or threatened litigation involving the CPI. Confidentiality does not permit a CPI to conceal fraud or make misleading statements. It simply restricts unauthorized disclosure.
How should CPIs think about II tools under ethics and confidentiality rules?
If II tools are used in audit work, the CPI must still protect confidentiality of client data, data security, professional competence, due care, professional judgment. A CPI cannot blindly rely on II-generated analysis. Outputs must be evaluated for reliability, bias, completeness, and consistency with professional standards. If client data is uploaded to external systems without proper safeguards, ethical and confidentiality issues may arise.
What is professional skepticism?
Professional skepticism is an attitude that includes a questioning mind and a critical assessment of audit evidence. It means the auditor neither assumes management is dishonest nor assumes unquestioned honesty. In practice, the auditor should probe inconsistent explanations, remain alert for contradictory evidence, challenge assumptions underlying estimates, consider the possibility of fraud. IUD loves testing situations where the auditor becomes too trusting or too anchored to management's narrative.
What are common judgment biases auditors should guard against?
Common biases include confirmation bias, favoring evidence that supports an initial belief, anchoring, relying too heavily on the first information received, overconfidence, excessive faith in one's judgment, groupthink, conforming to team views without sufficient challenge, availability bias, overweighting recent or memorable information. Professional skepticism helps counter these biases by forcing the auditor to seek disconfirming evidence.
What engagement types should a CPI candidate know in IUD?
Major engagement types include audit provides reasonable assurance, review provides limited assurance, compilation no assurance, preparation engagement no report no assurance. Attestation engagements such as examinations, reviews, and agreed-upon procedures. Candidates should understand the level of assurance, applicable standards, and report wording differences.
What are preconditions for an audit engagement?
Before accepting an audit, the auditor should determine whether the financial reporting framework is acceptable. Management acknowledges responsibility for preparing the financial statements. Management acknowledges responsibility for internal control relevant to the preparation of the statements. Management will provide access to information, records, and personnel. If these preconditions are not met, the auditor normally should not accept the engagement.
What is the purpose of an engagement letter?
The engagement letter documents the understanding between the auditor and the client. It helps prevent disputes by clearly stating the nature and scope of services. Typical contents include objective and scope of the engagement, responsibilities of the auditor, responsibilities of management, applicable financial reporting framework, expected form and content of reports, inherent limitations of an audit and internal control.
What matters should be documented in audit documentation?
Audit documentation should be sufficient to enable an experienced auditor, having no previous connection with the engagement, to understand the nature, timing, and extent of procedures performed, results of procedures and evidence obtained, significant findings and issues, conclusions reached, and professional judgments made. If it is not documented, the auditor may struggle to prove it was actually done. The exam is not subtle about this.
What is the difference between permanent and current audit files?
The permanent file contains information of continuing relevance, such as organizational documents, long-term contracts, debt agreements, accounting manuals, and key policies. The current file contains documentation specific to the current year's engagement, such as current testing, trial balances, confirmations, lead schedules, adjusting entries, and current correspondence.
What is the purpose of communicating with those charged with governance?
The auditor communicates with those charged with governance, such as the audit committee, to discuss significant engagement matters including auditor responsibilities, planned scope and timing, significant accounting policies and estimates, significant difficulties encountered, corrected and uncorrected misstatements, significant deficiencies and material weaknesses. Governance communication supports oversight and helps maintain auditor independence and transparency.
What is the difference between a material weakness and a significant deficiency?
Both relate to internal control deficiencies, but a material weakness is more severe. A material weakness is a deficiency or combination of deficiencies, such that there is a reasonable possibility a material misstatement will not be prevented or detected and corrected on a timely basis. A significant deficiency is less severe than a material weakness, but still important enough to merit attention by those charged with governance.
How do SEC and PCAOB independence rules generally compare to AICPA rules?
SEC and PCAOB independence rules for issuers are generally stricter and more prescriptive than the AICPA rules for non-issuers. They focus heavily on avoiding financial, employment, business, and certain non-attest service relationships that could place the auditor in the role of management or create self-review threats. For exam questions, if the client is a public company, think stricter independence first.
Why are GAO independence rules important?
GAO standards apply to government audits and attestation engagements under government auditing standards. They include independence requirements and a conceptual framework for identifying, evaluating, and applying safeguards to threats. IUD may test that government-related engagements can involve additional requirements beyond ordinary AICPA audit standards.
What is due professional care?
Due professional care requires the auditor to act with the skill and diligence expected of a reasonably prudent auditor. It includes proper planning and supervision, critical evaluation of evidence, adequate technical competence, appropriate professional judgment. It does not require infallibility, but it does require real effort, attention, and competent performance.
How does independence in fact differ from independence in appearance?
Independence in fact is the auditor's actual state of mind. Independence in appearance is whether a reasonable informed third party would conclude the auditor is unbiased. Both matter in attest work.
What is a covered member for independence purposes?
A covered member generally includes the engagement team, persons in a position to influence the engagement, certain partners or managers in the office of the lead attest partner, and the firm itself. Independence rules are often applied by asking first whether the person is a covered member.
How do immediate family relationships affect auditor independence?
Immediate family members, such as a spouse or dependent, are treated very strictly. Their financial interests or key client employment can impair the auditor's independence.
How can close relatives affect independence?
Close relatives are usually evaluated less strictly than immediate family. But independence may still be impaired if the relative has a key position at the client or a material financial interest the auditor knows about.
Why does a direct financial interest in an attest client impair independence?
A direct financial interest creates a self-interest threat because the auditor could benefit personally from the client's reported results. Even a small direct ownership interest typically impairs independence.
When can an indirect financial interest impair independence?
An indirect financial interest impairs independence when it is material to the auditor. The exam often contrasts direct interests, which are usually prohibited, with indirect interests, which turn on materiality.
How do joint closely held investments with a client affect independence?
A joint closely held investment with the client officers, directors, or principal owners can create a serious self-interest and business relationship threat. If material, independence is typically impaired.
How can loans between the auditor and the client impair independence?
Loans can create self-interest threats. Certain normal lending relationships with financial institution clients may be allowed if made under ordinary terms, but many other loan relationships impair independence.
Are normal credit card balances with a client always prohibited?
Not always. Normal consumer credit arrangements may be permissible if balances are current and within ordinary terms, but large overdue balances can impair independence.
How do overdue fees affect auditor independence?
Significant unpaid fees from prior years can create a self-interest threat because they resemble a loan to the client. If overdue for an extended period, independence may be impaired.
Why are contingent fees generally prohibited for attest clients?
Contingent fees tie the CPI's compensation to a desired result, which directly threatens objectivity and independence. For attest clients, they are generally prohibited.
How are commissions treated when the CPI also performs an audit or review for the client?
Commissions are generally not allowed when the CPI performs an audit, review, or certain other attest services for the client. The financial incentive creates an unacceptable threat to independence.
What should a CPI do when receiving or paying a referral fee?
Referral fees may require disclosure to the client or other affected parties. The CPI should be transparent so the fee does not create a hidden conflict of interest.
Can an auditor prepare source documents for an attest client?
No, preparing source documents is a management responsibility. Performing that function would create a management participation threat and impair independence.
When may bookkeeping services be provided to a non-issuer attest client?
Limited bookkeeping assistance may be allowed for some non-issuer clients if management accepts responsibility, designates a competent individual, and the CPI does not assume management functions.
Why are management decisions always off-limits for the auditor?
Making management decisions places the auditor in the role of management rather than an independent evaluator. Once that line is crossed, independence is gone.
How do employment negotiations with an audit client affect independence?
If a member of the engagement team is discussing employment with the client, independence is threatened immediately. The individual usually must be removed from the engagement and the situation evaluated promptly.
What happens when a former partner joins an audit client in a key position?
The firm evaluates whether relationships remain that could impair independence, such as unpaid capital balances, continuing influence, or close ties with the engagement team. Public company rules are especially strict.
Why is partner rotation important in issuer audits?
Rotation helps reduce familiarity threats and keeps the audit fresh. PCAOB and SEC-related rules require rotation for certain lead partners on issuer engagements.
How do gifts or hospitality from clients affect independence?
Trivial and inconsequential items may be acceptable, but significant gifts or lavish entertainment create self-interest or familiarity threats and can impair independence.
How can litigation between the client and auditor affect independence?
Actual or threatened litigation can create an adverse interest threat. If the dispute is significant, a reasonable third party may doubt the auditor's objectivity.
What is an advocacy threat?
An advocacy threat exists when the CPI promotes a client's interests so strongly that objectivity may be lost, such as acting as a client's champion in a dispute or marketing securities.
What is a familiarity threat?
A familiarity threat arises when a long or close relationship with the client causes the CPI to become too sympathetic, trusting, or accepting of the client's views.
What is an undue influence threat?
An undue influence threat occurs when a client or other party pressures the CPI to reach a certain conclusion or to reduce work. Pressure from powerful executives is a classic example.
What is a self-interest threat?
A self-interest threat exists when the CPI could benefit financially or otherwise from the client relationship. Examples include ownership interests, significant unpaid fees, or contingent compensation.
What is an adverse interest threat?
An adverse interest threat arises when the CPI's interests are opposed to the client's interests, such as when the CPI is in litigation with the client. That conflict can impair objectivity.
How can an engagement quality review help safeguard independence and quality?
An independent reviewer can challenge significant judgments, review conclusions, and identify threats the engagement team may have missed. It is a strong safeguard when risks are high.
When should a CPI decline or discontinue an engagement?
The CPI should decline or withdraw when threats cannot be reduced to an acceptable level, client integrity is in doubt, preconditions are missing, or management refuses necessary access or representations.
What is professional judgment in auditing?
Professional judgment is the application of relevant training, knowledge, and experience to make informed decisions about audit actions, evidence, and conclusions. It must be grounded in standards, not guesswork.
Why is professional competence an ethical requirement?
A CPI should undertake only those services that can be completed with appropriate competence. Accepting work beyond one's ability without proper assistance violates due care.
How does due care affect staffing decisions on an audit?
Due care requires assigning personnel with the right skill level and supervising them appropriately. Complex areas should not be handed off casually to inexperienced staff without oversight.
Why must assistants be properly supervised?
Supervision helps ensure procedures are performed correctly, issues are escalated, and conclusions are supported. Poor supervision increases the risk of material audit failure.
What is scope creep, and why should engagement changes be documented?
Scope creep occurs when services expand beyond the original agreement. Changes should be documented so responsibilities, fees, timing, and independence implications remain clear.
When should an engagement letter be updated?
It should be updated when terms change, services expand, management changes significantly, the reporting framework changes, or misunderstandings about the engagement arise.
What is the purpose of predecessor-successor auditor communication?
It helps the successor auditor assess client acceptance risks, including disputes with management, integrity concerns, fraud issues, and reasons for the auditor change.
What should a successor auditor ask the predecessor auditor?
The successor should ask about management integrity, disagreements over accounting or auditing matters, communications with governance, fraud or illegal acts, and reasons for the change in auditors.
What if the client refuses to allow communication with the predecessor auditor?
The refusal is itself a red flag. The successor should consider that limitation in deciding whether to accept the engagement and often should decline.
What factors matter in client acceptance decisions?
Important factors include management integrity, independence, firm competence, staffing availability, engagement risk, and whether the reporting framework and engagement terms are acceptable.
What factors matter in client continuance decisions?
The firm reassesses whether independence remains intact, management remains trustworthy, the relationship is still appropriate, and the engagement can be performed with quality.
Why is management integrity so important to acceptance and continuance?
Audits rely heavily on management representations and access to information. If management lacks integrity, audit risk rises sharply and evidence may become less reliable.
Why does tone at the top matter before accepting an engagement?
Tone at the top influences the control environment and the likelihood of honest financial reporting. A weak ethical culture raises fraud risk before the audit even begins.
Who owns the audit documentation?
Audit working papers are generally the property of the auditor, not the client, even though they contain client information. That ownership does not override confidentiality obligations.
Can a client demand all working papers from the auditor?
Not generally. The auditor may provide certain documents where appropriate, but working papers are normally the auditor's property and are not automatically turned over on demand.
Why is working paper retention important?
Retention supports quality control, inspections, legal defense, and compliance with professional standards and firm policy. Destroying documentation too early can create serious problems.
What is the experienced auditor standard in documentation?
Documentation should allow an experienced auditor with no prior connection to understand the procedures performed, evidence obtained, issues identified, and conclusions reached.
What kinds of matters are considered significant findings in an audit file?
Significant findings include unusual transactions, major misstatements, difficult judgments, fraud indicators, significant deficiencies, and issues requiring consultation or governance communication.
What is the final assembly period for audit documentation?
The final audit file should be assembled on a timely basis after the report release date, commonly within a limited period set by standards or firm policy. After that, changes are restricted and must be documented.
Can audit documentation be deleted after the report release date?
Routine deletion after the documentation completion date is generally not appropriate. If information must be added, the auditor documents what was changed, when, by whom, and why.
Why distinguish between duplicate documents and key evidence in the audit file?
Duplicate or administrative material may be removed during final assembly, but evidence supporting conclusions must remain. The file should be complete, not cluttered and not stripped bare.
Why must the auditor date documentation appropriately?
Dating helps establish timing, responsibility, review status, and whether work was performed before the report was issued. It also supports accountability.
What independence matters should be communicated to those charged with governance?
The auditor typically communicates independence relationships and safeguards applied so governance understands the auditor's objectivity and can challenge concerns early.
Why communicate significant accounting policies to governance?
Governance should understand important accounting choices, contentious policy areas, and whether management selections are appropriate and consistent with the reporting framework.
Why must uncorrected misstatements be communicated to governance?
Governance needs to know about uncorrected misstatements so it can evaluate whether management's decisions are appropriate and whether the aggregate effect may be material.
When should fraud involving management be communicated to governance?
Fraud involving senior management or material fraud should be communicated promptly because it directly affects the reliability of financial reporting and oversight responsibilities.
What is meant by two-way communication with those charged with governance?
Communication is not just the auditor delivering information. The auditor also listens to governance's views, concerns, knowledge of fraud risks, and oversight observations.
What if those charged with governance refuse meaningful communication?
That may signal a governance problem and increase audit risk. The auditor should reconsider the relationship, modify procedures, and evaluate whether withdrawal is necessary.
What is an engagement quality review?
It is an objective evaluation of significant judgments and conclusions performed by an experienced reviewer before the report is released, usually on higher-risk engagements.
When is firm consultation advisable during an audit?
Consultation is advisable for difficult accounting issues, independence concerns, unusual reporting questions, suspected fraud, and other matters involving significant judgment or risk.
What is a firm system of quality management?
A system of quality management is the set of policies and procedures a firm uses to provide reasonable assurance it performs engagements in accordance with professional standards and legal requirements.
What elements are commonly included in firm quality management?
Common elements include governance and leadership, relevant ethical requirements, client acceptance and continuance, engagement performance, resources, information and communication, and monitoring with remediation.
Why do leadership responsibilities matter in quality management?
If firm leadership does not emphasize quality, staff may prioritize fees or speed over standards. Quality culture starts at the top.
Why is ethics training important at the firm level?
Regular training helps personnel recognize threats, apply safeguards correctly, and stay current with independence and confidentiality requirements.
How do client acceptance policies support audit quality?
They help the firm avoid clients with integrity problems, unmanageable risk, or independence conflicts before those issues damage audit quality.
Why are monitoring and remediation important in quality management?
Monitoring identifies weaknesses in the firm's system, and remediation addresses root causes so the same failures do not keep repeating like a bad audit sequel.
What is the difference between a hot review and a cold review?
A hot review occurs before report release and can affect current engagement conclusions. A cold review occurs after completion and is used for inspection, monitoring, and future improvement.
What is peer review in public practice?
Peer review is an external evaluation of a firm's accounting and auditing practice to assess compliance with professional standards and quality control or quality management requirements.
Why is independence required for reviews and examinations, but not for compilations?
Reviews and examinations provide assurance, so users rely on the practitioner's objectivity. A compilation does not provide assurance, so independence is not required, though lack of independence is disclosed.
What if the auditor lacks expertise in the client's industry?
The auditor should obtain the needed knowledge through training, consultation, or specialists before accepting or continuing the engagement. Competence cannot be faked into existence.
How should an auditor respond to suspected illegal acts discovered during planning?
The auditor should understand the matter, discuss it with appropriate management if appropriate, consider legal advice, assess reporting implications, and evaluate effects on the audit strategy.
Why is it risky to use confidential client data to train an external AI model?
Doing so may violate confidentiality, privacy, and contractual obligations and may expose sensitive data beyond the client's control. Safeguards and client permission are critical.
Why do secure data retention and destruction policies matter ethically?
They help protect confidential information from unauthorized access, misuse, or accidental disclosure long after an engagement ends.
Why must management designate a competent person when non-attest services are provided?
The client must take responsibility for decisions and oversee the service. Without a competent designated person, the CPI may effectively be acting as management.
What is an informed management individual in the context of non-attest services?
It is a person at the client who understands the objectives of the service, can evaluate the adequacy of the work, and accepts responsibility for the results and decisions.
Can a CPI authorize transactions for an attest client?
No, authorizing transactions is a management responsibility and would impair independence.
Can a CPI take custody of client assets during an attest engagement?
Custody of client assets can create serious threats to independence and objectivity and is generally not compatible with the auditor's independent role.
Why is the subordination of judgment rule important?
A CPI must not knowingly subordinate professional judgment to a supervisor, client, or colleague when the result would be misleading or improper. Integrity outranks convenience.
When may a CPI depart from a professional standard?
Departure may be justified only in rare circumstances when compliance would produce a misleading result. The CPI should be prepared to justify and document the departure thoroughly.
What are acts discreditable to the profession?
Acts discreditable include conduct that harms the profession's reputation, such as withholding client records improperly, discrimination or harassment in certain contexts, or failure to follow legal and professional duties.
When must client-provided records generally be returned?
Client-provided records ordinarily must be returned upon request, even if fees are unpaid, because those records belong to the client rather than the CPI.
How do client records differ from CPI-created work product?
Client records are the client's original information. CPI work product consists of the firm's analyses, memoranda, schedules, and documentation created during the engagement and is generally the firm's property.